Jesus Chrysler.
All right, boys. Let's take a look at what's happening. Let's give it a couple of minutes for everybody to get here. It's an interesting open, I think. Wait, let me kill this replay. Yes, we've started with tiny gaps, so open with little gaps. I think. Let's see. Yeah, this price action right here. So open with a gap, fill the gap, and a bunch of these probably still filling up the gap. So yeah, just filling the gap in the dollar Swissy. In any case, let's take a look. It's a big week. I think it's probably like one of the last weeks in this year, which is going to be full week of action. A week after that, it's time to ramp down. All right. So as always, the way we start our week, we're gonna take a look at what's on the calendar, right? So, and this time we're going to take a look at what's on the calendar for the next 2 weeks, just to know where we are, when we need to finish, etc., etc. So, the big event is this Tuesday. We're going to have a CPI data. Pretty much all of last week, risk did not do much, even though there was some action. And let's take a look at NAS, for example. Um, This is all of last week, by the way, in euro dollar. A whole lot of nothing. See this sideways range. Same thing with a lot of. So this for the last 2 weeks. This NAS has been just in this range, sitting in prep, waiting for what's going to happen with the interest rates, and more importantly, we have FOMC statement, FOMC funds rate, FOMC press conference on Wednesday. So based on this number, they're gonna set the policy. Everybody's expecting a zero point 0.5, and mm, the CPI is expected at zero point 0.3. I think the core CPI, yeah, zero point 0.3. So on Monday, we're gonna do a Discord only. So if you're watching this somewhere else on TradingView or YouTube, check out the link. It's discord.gg/daytrade. It's in the description. And we're going to do analysis. We're basically going to do if then analysis. And the if then analysis we're going to do what happens, how we're going to trade it if it comes in line at 0.3, what happens if it comes in at 0.4, 0.5, and what if CPI comes in at zero point 0.2 or lower. And we're going to outline our action steps based on the price action already that we're going to see on Monday. So whenever the news hits on Tuesday, we're going to be ready for whatever it's going to bring us. So we're going to have pretty much a plan to trade in whatever outcome we get. So obviously on Wednesday is going to be the big kahuna with the press conference, and it all depends on this data right here, because if this data is one time off last month was it came in soft as an outlier, that's one scenario. If it's coming in now hot again, then that was last month was just one off. If it comes in soft, which is probably will, then it's already another scenario with the inflation peaking and the Fed responding accordingly. So the Fed response we'll know on Wednesday, and that's going to be a huge moving week for us. Let's also take a look at what's happening next week, so we know when to. As you can see, next week already, less and less red news. Red. So this week is going to be the culmination of the for the year. There's some other CAT CPI, some JPY news, etc., etc. But for the most part, we'll know everything for the remainder of the year based on the next Tuesday and Wednesday's trading sessions, and which will set the tone for the remainder of the year, whether or not we're going to get the Christmas rally or we're going to get a Christmas sell-off and all that jazz. And then next week of 18th to 23rd, it's basically just close your positions if you're holding, and start enjoying your time off. And obviously, the after that it's Christmas, blah 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 blah. The whole week afterwards is done, all the way up until January 3rd, where we begin again. A slow ramp up. I think the Wednesday, January 4th, is going to be getting getting a little volatile already. Once again, in any case, we'll cross that bridge when we get there. But for now, this is going to be probably uh, the next 3 days will be the most volatile days in a long while. So prepare for some fireworks. We're going to get one of these spiky actions that will either take us to in the breakout. As let's take a look at the S&P is a perfect example of what's going on. So as you can see, let's daily chart. We approached. We've seen this chart before, right? So this is the trend line that has spinning tops at the top, where we sold off from, et cetera, et cetera, et cetera. But this is the key level right here, and obviously this trend line is coming in as well. Some people drew this trend line like this, so it already broke down for them. But I drew mine like this because at a 45-degree angle, we can see that we took a pause exactly, and now you have a confluence of two supports. You have the horizontal, and you have the channel. And the reason why it's been holding for the last three trading sessions is because everybody's anticipating what's going to happen with the CPI. Nobody is really going to commit a lot of capital one way or another, as I've been ad nauseum explaining all during all the daily webinars last week. So now we might have some fake out actions. I wouldn't take lots of positions on Monday tomorrow. I would wait for the CPI data and then execute based on that CPI, because however that CPI comes in, uh, we pretty much will know what Fed is going to do, uh, because Fed gets the CPI a day earlier, so they will know already what's happening with the CPI, and they'll prepare their actions accordingly. So, and they're going to be preparing their actions pretty much the way we're going to be preparing our actions, in line with the what that CPI print will be, more or less, obviously. So even before Wednesday, once the CPI hits on Tuesday, we'll know how to position ourselves for the remainder of the year, pretty much. So let's see. We're gonna take a look at major markets right now. So I expect another maybe sideways day tomorrow. Maybe somebody decides to, because it's going to be less liquid, because a lot of people again will not be committing a whole lot of capital. So people with capital, big institutional players on the thinner liquidity, might be able to push markets one way and another just to trap weaker hands. And we also basically, all of this was not this was just profit taking for people who were accumulating on the lows here. We might dip below, but again, I wouldn't I wouldn't sell uh, a lot. Even if we get setups, we will be I'm shorting, because technically this is short and this might continue lower. However, again, before Tuesday, we're not going to be taking major cuts in anything. It's going to be day trades only. It's going to be in and out, and it's going to be fast, because you might get either crazy action, or it's going to be sideways nonsense. Either way, um, you shouldn't have a lot of you shouldn't have positions before the news on Tuesday. So if you have a short term setup on 4 hour, 1 hour time frames, well, you can take it, but otherwise, it's advisable to just chill. Um, so probably going right here. So yeah, and the 272 fib. This is when you use fibs as targets. This is the fibbed area. We retraced to 786. We've did the perfect bankers trade. Well, if you want to find out what a bankers trade is, stop by the Discord. Anyway, yeah, I think this is where we're going. We're gonna be heading here in a more overnight. I think very quite possibly, and the low. This is the key level right here. So with all that said and done, let's rock and roll. See, we just go through major markets. So, like I said, if you want to short, I think Bitcoin and crypto started selling off earlier prior to the open today. A little bit, some volatility or not, a little bit. It was like a 15-minute. Yeah, so it started pushing down, then up, then we had a nice breakdown right here, a retest continuation. So, but we stopped at equal lows right here, as you can see. So let's see, maybe this is showing us that we're gonna have some kind of a range day. So Bitcoin stopped at the pretty much at the lows as well. Maybe we're gonna have just sideways. Maybe Bitcoin and ETH just showing us the price action that we're gonna have in the coming sessions for in SPYs, well S&Ps, Nasdaq, US 30, whatever. So US 30 is actually is doing its last hurrah right here. So it's also sitting at key level support, and oh wow, it's actually chewing through it right now. I wouldn't assign too much weight. It's only 6:15, only 15 minutes since we opened uh, the futures market. So I would wait another 2 hours to 3 hours for Asian flow to come in. But as you can see, the last since the last beginning of last week, Tuesday, we've been essentially up, down, up, down, down, up, sideways consolidation in its various forms on indices. So if I'm gonna be trading indices, I'm not going to trade them to the long side. I'll be trading them to the short side. All right. So selling it here, I'm not gonna do that. I obviously want to wait for some kind of pullback. So if I get some kind of pullback, maybe we're gonna find buyers here. We're gonna one sec. Where are my tools? So do something like this. Maybe I'll consider that. But otherwise, it's a lot of traders, they especially novice traders, they think that you have to trade every single day, and because they think that market owes them money and they have to pay rent and this and that, that you should be trading. And when the conditions of trading are suboptimal, you should professionals just stay out, they chill, they wait. And that's what has been happening with the big funds waiting for the CPI and FOMC data. So honestly, tomorrow, um, depends what happens, but it's too late to sell here. You're going to be selling into the floor, and I don't want to be buying it because technically we're positioned for lower prices right now, as of now at least. Right, we got a rejection from a very heavy resistance in all indices, and we're basically at support right now, which can easily break. And if it breaks, that's going to be a stop loss city, because now we're going to be covering all of this inefficient price action from when was it? The previous CPI, when it came in soft, this was the rally. So if the stop losses will start getting triggered and people will start panicking a little bit, we might get sell the rumors, buy the news. So if we get the sell the rumors where we sell off, and then CPI comes in and reverses the whole thing, we get the Christmas rally, fine. And if we pump and then the CPI comes in line or hotter than expected, because the PPI last week did come in hot. That's enabled some of the sell off last week. Then, obviously, if we rally in the next 24 hours prior to the CPI, and the CPI shows us this rally uh, was a little too premature, then the sell off will ensue, and it's going to be a powerful sell off. In either case, we'll be ready to. That's when you should be taking your trades, not when we're right at a precipice of the event. US 30 on its knees, so nothing interesting here. What's interesting is actually this chart of US 10-year yield. So unlike other, for example, dollar in unlike Dixie, you see that it's was a little bit choppy on Friday. but rates actually are the ones that pricing in what the market participants are expecting, and all of a sudden they're really really driving upwards. So we just had a higher high, higher low. So low, higher low, high, higher high, right? So we had a shift in market direction. Plus, we took out this key level, and we are pausing right smack at this at the end of this wedge with prior to the CPI news. So let's wait. Let me see. I'm just gonna clean this up. I don't need this anymore. So if we have a daily close above this wedge, that's going to be a pretty powerful sign that we're going to be recovering. And we obviously have the multiple divergences to the top side. And if the news delivers kill shot, this thing is going to just fucking blow up. And if this thing blows up, obviously US dollar is going to strengthen tremendously. So for now, though, we're watching. This might still sell off and do or do sideways consolidation, but it is at key resistance. So a close above will give us a more bullish action in the US dollar, and that translates into sell off of euro dollar. As you can see, I already pointed out on Friday, but uh, we sold off from the key resistance, and I think this is pretty much very highly probable that in the next session we'll be retesting these lows here. I don't think we're going to be breaking out to the highs. So same thing with pound. We've rallied correction and this anemic rally upwards, but we're not even close to at the previous highs. So if I see a break, if the price action takes out this supporting channel, bullish channel, that's going to be a sell for me as well. I'm long a little bit of the euro pound cross because we're just consolidating around this key support zone, and you can see if we start taking out this is an inverted head and shoulders on top of everything. So if we start taking out the neckline, I think we'll be retesting these highs here. Aussie probably same similar story, just a little bit upwards, but still for the most part, this is also a head and shoulders pattern. So if we're gonna start selling off, there's definitely room to go towards the downside. And Kiwi is grossly overbought. I'm not selling Kiwi against the dollar, but I am buying Aussie New Zealand. So I'm long Aussie. I'm short New Zealand for that reason, because first of all, this is a daily chart. This is highly highly oversold in a very aggressive. This is sustainable, as you can see, up down up down up down, right? It's a little sideways consolidation, up down, blah blah blah. This is just vertical fucking sell off. So we're coming in at this previous key level here, support. So we'll see. I bought the dip right here. I'm long at around these levels right now. Stops below lows. So I'm at least I'm aiming to catch pullback into this previous. So basically, this is the trade. Uh, so simply here, that's the trade. You have the channel, obviously, that has been respected, and test underneath the breakdown point from here, right? Fuck it, yeah. So that's what I'm looking for. And if FX trades, oh, dollar yen, obviously the yen pairs are going to be interesting because they're highly sensitive to the interest rates, and based on CPI, this dollar yen which has been hammered quite hard since 150 top, with some pauses on the 4 hour basis, but on the daily, it's been uh, getting hammered pretty aggressively. So right now we've bounced off of 200, and in the last 5 trading sessions, 5 days, we've been just sideways consolidating again, awaiting data. So I don't want to sound like a broken record, but the markets are just literally waiting for Tuesday's data. So that's why you see this indecision, because there's nobody committing a lot of capital one way or another, because they don't know what the fuck data is, what kind of data is going to come out. So since they don't know, why would you want to? This is not a gambling. This is not a casino where you're just going to spin the wheel as a roulette and commit billions and tens of billions of dollars into something just because you're bored. All right, so, highly unprofessional to say the least. So this is euro yen. Uh, I basically said that I'll be looking at for the trend line here. Um, let's see, probably shorter time for me, right? So somebody was telling what to do. They were when we were here somewhere, and I said this is just a no man's land. As you can see, we've been sideways consolidation. So I'm interested in either a breakout to the top side if we take out this bear channel, or a rejection from this key level right here. I'll be selling then, or if we take out the rising uh, trend line here to the downside, maybe I'll be selling then. But for now, we've pretty much bounced off of key channel support, and we're approaching resistance. So I want to see how we're going to react around this resistance. Are we going to go up, or are we going to get a rejection? And based on that, we're going to have a pretty much a follow through, either to the downside or to the top side. So that's what I'm looking at. Pound euro yen. Pound yen is I'll let uh, my colleague Blackson do the his favorite new pair. Uh, this is just yeah, a lot of sideways. This is contraction in volume. We'll see some kind of crazy moves coming here as well. Dollar yen, yeah, dollar yen took out its rising trend line, and now it's stuck between this resistance and this support. So whatever news will give us will either fly to the moon, or this thing is going to start correcting this whole move up even more so, because essentially the CPI tomorrow is going to give us um, a clue as to what the dollar is going to happen to the dollar. And since it's going to be dollar versus everything else, it doesn't matter what you're going to pick, euro dollar or dollar yen or Swissy or dollar CAD. All of dollars going to be moving incongruent with the CPI data and the anticipation of what uh, the FOMC and the Federal Reserve will do on Wednesday. So let's take a look lastly at gold. Gold is again sitting at key resistance, previous highs, and this is a W, right? So, but we're we've initial probe of the resistance at this level here. We sold off, found support. Buyers came in, tried to push it. This was very aggressive, and with that aggressive price action, this is a daily chart. The next day, probed the lows, and then we reversed, and now we've again reversed to the top side. So we're just sideways consolidating, trading between 1765 and 1800 and change. So again, everything, this will move if the CPI comes in hot, then this thing will crash and burn back to the lows here. If the CPI comes in soft or in line, well, in line is the more difficult, the most challenging prep work for the for Wednesday. I mean for Tuesday. But if basically we're gonna come in soft CPI will allow for this to start breaking, uh, expanding into this new range right here. So we're gonna start get that Christmas rally and start risk will catch a bit. Lastly, I don't want to do crypto, so I'll pass the baton to one of our colleagues. Anybody wants to take on? Um,
Go ahead, Blackson. No Blackson. If nobody
no, he's
wants to
muted.
take it.
I'm right here. I'm right here. I'm right here.
You want to
My
take
thing was
crypto?
muted. Yeah, bet, no problem.
All right.
So, we got some interesting stuff for crypto, considering that we're in this huge pattern right here that we've already seen quite a few times on Bitcoin. Um, when I say quite a few times, I mean like 4 times. We see this very, very, very insufficient trend line to the upside, which we've already seen repeat itself about 4 times. The longer we stay in this specific trend line right here, the harder the break is. And considering this week we have a lot of fundamental news, a lot of shit that can influence the price of Bitcoin and crypto overall, of course. So I think, as Stan already said, wait what happens with the data this week, specifically the CPI data, because that's going to be a huge market mover for Bitcoin. And I think, we can close crypto off with that because it's very, very simple. Just wait for what the news is going to be this Tuesday, and then take a trade based off of that. Because anything you're going to take now is going to be basically a gamble. Because anything that happens with Tuesday is basically going to liquidate you to both sides. So
Yep, agreed.
that's
Yep.
it for crypto.
All right. Yeah, it makes sense. I mean, so the overall summary of this of right now is wait and see. Tuesday will give us guidance towards what's going to happen for the remainder of the year. Whether we're going to be trading, buying dips and risk because we're getting a Christmas rally, or if Fed policy is still going to be super restrictive because the CPI print is hot. That means they're going to have to still keep on raising rates more aggressively, and all the risk assets like NAS, gold, everything versus US dollar will be selling off, including crypto, because crypto is going to be highly correlated with the indices right now, especially Nasdaq, etc. So, all right, that's about wraps it up. Unless anybody have some questions. Yeah, I do cover futures. Just did them. Mm, somebody asked. So, I guess. Well, Uh, like I said, so let's. I think this is pretty much self-explanatory. Let's wait for
Stan,
yeah,
I have a question.
yeah. Go ahead.
Yeah, man. So, according to to the forecast, what range above the expectation or down the expectation would you expect? Like a big dump, or like a medium, rally, or a soft
Yeah,
rally, or
yeah. I think even minute deviation will cause extreme violent moves. So if the core CPI comes in at point 0.2, that's one thing. If it's at point 0.4, that's another thing. So, wait, this is core CPI, yeah, core CPI graph. Okay, there we go. So I think, as you can see, each 1 point difference is going to be critical. So markets pretty much everybody's positioned to for the Christmas rally. Everybody wants the Christmas rally. So markets just literally looking for an excuse uh, to do that, to explode upwards in risk. So even if we come in at uh, point 0.2 right here, and markets will just cream their pants, and the thing is gonna take off for the next 2 weeks. And again, I remind everybody: do not jump in with the algos based on the news. You're gonna literally have another week and a half to take positions in wherever direction the markets will take, because it will trend. We've literally been anticipating this is Nasdaq. Nasdaq hasn't been doing anything since last month. since the as you can see that we pretty much, yeah, we probed the highs, probed the lows, but we in this range for a reason, and markets are anticipating right now what to do next. So for the next 2 weeks, 1 week and a half, let's say, if you're not gonna catch the initial move, you're still gonna have follow through. So if we sell off, we're gonna have days of days and days of sell offs. If we're gonna rally, we're gonna have days and days and days of rally, simply on the news, because big funds, big institutional players, they cannot deploy all of their money at once, and then they have to pull their money before Christmas as well, on top of everything. So you're gonna definitely have some volatility in the coming weeks, and that's why I suggest in a week afterwards you should probably start closing, repping it up for the year. But this week you're gonna have, at least after Wednesday, after Tuesday, you're gonna have Wednesday, Thursday, and Friday probably gonna be following through on the Tuesday's price action. So any pullbacks you will get in whatever direction the market is trending to, you're gonna be able to enter into. You're gonna have 2-3 trading sessions to make money easily, and buy yourself some nice Christmas watch or something. So
Thank you.
yeah. That's about it.
For crypto, I know Blackson talked about crypto.
Let's go.
But
hold up, let me switch to the screen.
I personally believe that we're just waiting for the perfect. So like, think about it, right? Christmas is the 25th. We're currently pretty close to the low, and we are following this support line. I call liquidity. Yeah, you guys call it support line, and we're following this very steep support line here. I've had 3 past examples of it, and every time we dump. So if I connect the dots as this, price wants to dump so that when Christmas comes in, they see Bitcoin is at an all-time low. It's a good time to buy. Perfect bait to switch. So for me, Bitcoin, I would not touch it. If anyone is trading crypto here, I would not touch this until we break out of this pennant here. And for my expectations so far, I see that it's going to push upwards. So I believe it's going to push upwards, make people take longs off the breakout, off of the TA books, because TA, when you break upwards from any type of pattern, you're supposed to long. So let's grab some quick liquidity, grab that, and then dump. So I currently have a short target at the breakout on the top side of the pennant, and I believe we're going to go for a new low. We're going to go for a new low, but this low, I think we're going to have it, let's say the 25th, right? We're going to have a pretty low price, maybe. So let me go to my other chart here. Our current next low prediction is at, come on, let's load. So let me go to Bitcoin. Our next low prediction for Bitcoin, as for me, I have it at 11. I don't truly believe it'll push this far down. It really could push less. It depends, but I do believe CPI is setting up for a dump. We are most definitely setting up for a dump. For me, at least, I do believe we're going for a dump. I don't see any point of pumping. I really don't. Christmas is coming. Everybody's trying to buy shit cheap. That's the whole objective. And, they like to set that up for people and then give them the bait. So I believe we'll have another low, and then we'll have maybe a month. Remember this November month, we had this Bitcoin bottom. It's kind of just sideways movement, and then maybe we'll dump back again when we get some more news. But they have to solidify a position for those retail people or the general audience so they could buy and get into the market as well. It's just like a trend. A trend, there's just any social media trend. Let's buy some Bitcoin. It's cheap, revolutionary. I think it'll go around for 1,400. We'll see though. But I do believe we're going to dump on Tuesday. For Bitcoin at least.
Makes sense. All right, boys. And by the way, I want to show you something cool. We have a bunch of traders, all usually 5-6 traders, all sharing their screens throughout the day, and you can just pick whoever you want to follow, and we all do different analysis. Some people are swing traders, some only crypto, some people only FX, some people do this, that, blah blah blah, right? And you literally, you can follow different traders doing different shit and explaining their own different styles. So nobody does it like that, and you are exposed to different knowledge from different successful people right away. instead of following just one dude on YouTube and it's past, and he cherry picks the past experiences and et cetera, et cetera, et cetera. This we trade every day live. Every day we trade live, and you literally can just follow us, uh, see how we do, how we trade live. It's self-explanatory. Literally how we go from idea initiation, the birth of the idea, how to get loans, how in whatever instrument to get, to buy it, to sell it, and to the completion where and when we take profit. So not cherry picking anything. The live, it happens live. So we we take losers, we take winners, we take everything. You see all the dirt. No cherry picking, no nonsense, no bullshit repainting indicators or any of that. This is the only, as far as I know, only place that you can see multiple traders do this, because most people are YouTube promoters. They're not traders, and they just want to sell you something. We're literally just showing you how we trade. Come on in, it's free, and that's you can find the link for the Discord at in our description pages wherever you're watching this. All right, guys. So I wish everybody a prosperous next week. Strap on. Don't do anything silly. Remember, when the volatility is high, it's advisable to trade with a small position size, because the movements get exaggerated, and you can you'll be more advised to just to be cautious with the trades, especially when it's heavily reliant on the news, which you have no access to of knowing beforehand. So, with all that said and done, enjoy the rest of this Sunday, and we'll be back broadcasting like this, 8:20 a.m. New York time, Monday, and every day of the week. So, stop by, say hi, etc. All right, enjoy. I hope it helps.
I have a dope setup right now for a long.
Hold up, let me.
It's a little scary, but it follows all the rules of the principle. It's scary, but it follows.